Welcome to the Graybeard Chronicles podcast. Your hosts, Brian Halstead and Kevin Harkins, are two gray-bearded patriots who love God, their family and friends, and their country. The Graybeards are here to inspire, inform, and educate you on a myriad of topics they are passionate about. Brian and Kevin have a strong desire to share this with you to help you live your best life. Sit back and enjoy this amazing podcast as the Graybeards pass along the wisdom of the ages.
Hello, everyone, and welcome to another episode of the Graybeard Chronicles. I'm Brian Halstead.
And I'm Kevin Harkins.
And Kevin, we're here to pass along some wisdom of the ages. What the heck does that mean?
We're not perfect, but we do have gray beards. And that means we've got some significant life experience, some life lessons, and some perspectives that are worthy of passing along.
Well, I think that sums it up nicely. Let's get to it.
Kevin, good evening, kind sir. How are you?
Here we are again.
It's like we were just here last week.
It just seemed like it was a week ago. Yeah. But I have a question for you, as I always do. Well, not always, but I often start with a question.
Right.
Palladium. Yeah. What's your experience with palladium?
Zero experience.
Well, please tell me everything you know about it.
We're done. I just did.
Nothing.
Zero experience.
Isn't there like a restaurant called Palladium or something?
I don't know. Not that I'm familiar with.
Isn't there some sort of ancient Roman something that's called the Palladium as well? I don't know. I don't know. That could be. What do they say? I can neither confirm or deny. We're about ready to find out a lot more about palladium.
All right.
Did you know that it was a precious metal?
I did not.
You did not?
I did not.
Oh, my goodness gracious. All right.
I am eager to learn some stuff tonight.
Okay.
No doubt.
Absolutely. Well, Patrick, for the sake of our audience, let me just take a few seconds to introduce you. We're thrilled that Patrick Yip is with us. Patrick is an industry expert in the world of finance, and in particular, precious metals, gold, silver, platinum, and palladium, assuming that I'm pronouncing it correct. I think you're out of Oklahoma City, Oklahoma. Is that correct, Patrick?
That's correct.
Okay. And Director of Business Development for APMEX and One Gold. He's been with them for over a decade, and he's helped the company grow over 250% during that period of time. You can find him on lots of podcasts out there. He's out there. He's learned to speak about his trade craft very eloquently, and we are thrilled that you're here with us tonight, Patrick, to talk about, well, for sure, what it means to deal in precious metals, but also just a little bit more about you as well. And we know that our audience would like to hear about that. But here's my first question that I just want to roll out to you. You're the first person I've ever met who dealt in this world. I know it's out there. You hear, you see commercials on it, and I pay absolutely no attention to it. But how does one sort of grow up, become a professional in the finance arena, and all of a sudden you're in precious metals? How does that happen?
Yeah, great question. First of all, thanks for having me on. I'm happy to be here. So that's a great question. Like, most people look at precious metals, they're like, what is that? I don't know anything about it. How does someone get started in it? So for me, it all started back in 2008. I'm sure you and many of your guests will remember what happened back then. So I had the typical portfolio back then, typical bonds, stocks, just like most other people out there. The financial crisis obviously hit, and my portfolio got chopped in half. I didn't know what happened. I talked to my financial advisor. I said, what happened? And he's like, yeah, no one could have predicted that crash. So I go, surely someone knew about it, or someone saw kind of the writing on the wall. So it got me looking into Austrian economics. And then during 2008, it got me looking into precious metals. I later saw that precious metals, actually gold in particular, corrected with stocks initially during the beginning part of the year. And then at the end of the year, it was actually up. So it had a positive gain, unlike stocks that were down about 50%. So got me looking more and more into precious metals. Fast forward to 2011, I was actually located in Los Angeles, and there is a theater called the Palladium out there, just so you guys know. So that there is some building that is called the Palladium. But it got me to move from LA to Oklahoma City, and move with my then fiance, now wife. But yeah, we've been here for 11 years. I love it ever since.
Very cool. Yes, and so you did not imagine that there is actually a building.
I thought I'd heard that somewhere for sure.
So I love that question, and I certainly appreciate your answer. So I'm intrigued to learn more about this whole industry, because it's something that I have in the last several years been intrigued by, and never have taken any steps to do anything about it. So it's cool that you just all of a sudden showed up in our universe. So thank you for that. I'd really, like I said when we right before we started, I'd really kind of like to ask you to treat us like people basically that we are, right? So just have no knowledge of this industry whatsoever, and what would be maybe the 5 or 10 key things that you would share with us to help us better understand.
That was a lot, 5 to 10. Well, that's putting him. That's the pressure.
Well, we got
Patrick.
We got like an hour,
Right.
so I think he can
There
do
you
it.
go. Yeah, let me first start by talking about high level, about the different companies that we have over here, and then maybe we talk about inflation and then why people should own precious metals and what gold will do, what silver will do, and obviously there's a ton of stuff to cover over here. But let me start by highlighting some of the companies that we have. So APMEX is the parent company, and I almost consider APMEX like the Amazon of precious metals. So we have 25,000 products in stock, ready to ship. If you want gold, you want silver, you want platinum, you want palladium, you could click it, add it to your cart, use a credit card, use a bank wire, use a check, pay for it, and then we'll ship it to your house. And we'll get into the difference in all the different metals and forms and so on. So that's APMEX, that's the parent company. There's also a subsidiary company called One Gold. And what One Gold is, I almost call it like the Robin Hood or the Coinbase of precious metal. So instead of actually taking physical delivery of your metal, you could essentially own it in a vault that's fully audited, fully insured. So like these are for the people that, and I've had several customers too, where I tell them, hey, you should probably have some gold. They order gold, get shipped to their house, and they said, well, what do I do with it now? Like, what do I do with these coins? And that's a whole nother thing too. I mean, you could put it in the safety deposit box, you put it in the safe, you could hide it or whatever. But One Gold is meant for the people who want to have gold or silver or platinum, but they don't necessarily want to own it in their house. So you get direct ownership of it. You could buy it, you could sell it, you could trade it, you could liquidate it within seconds and then redeem it to your bank account. Or if you want, let's say you want physical too, you could actually redeem it and take physical delivery of a coin. So those are high level, the companies that we have over here. I could get into some of the products if that's helpful for you guys.
Before we get to that, I'd like to ask you another question. Back to the sort of the history. I'm
Sure.
going to demonstrate my 1 ounce of understanding of the American financial infrastructure. And it used to be based solely on backed by precious metals, I believe, and mostly gold and some silver. Is that correct?
That's correct.
So when that changed, and I think it started to change, as I remember, somewhere around Nixon, when Nixon was president, things started to convert. And I can only imagine, I didn't listen to any of them other than a few sound bites that I remember as a child, hearing my father comment about, how the financial sky was falling because we were no longer backed by precious metals in the American financial infrastructure. The sky clearly hasn't fallen. And so how did we make it through that? And now that it's not all backed up by precious metals, what is it backed up other than by, I guess, government insurance or something? I don't know. Can you address that and then get into the products?
Yeah, so back in like a while back, you used to have gold certificates. So if you look at like an old $20 bill, it would say gold certificate, and it says something like it's redeemable for gold to the bearer on demand. And what the thought was is there was actually gold in the treasury. So people used to trade around gold coins, silver coins back then. Let's say before 1933, like you would pay someone in a gold coin or a silver coin, but then it got to be a little inconvenient. So people said, okay, now I'm lugging around these gold coins, and gold is pretty heavy too.
Right.
So people said, well, let's use these paper notes that are essentially a claim on gold. So then people started trading this stuff around. They look similar to the Federal Reserve note right now, but they were backed in gold and silver. You have gold certificates, you have silver certificates. And then in 1971, as you mentioned, right around the Nixon time too, they started they took the backing away from gold and silver. So basically, like your currency was no longer backed by any precious metals. It became fiat. So what does that mean? It was the demand of basically you and I trading currency notes, and the only thing that gave it value was the demand. I want dollars, you want dollars. That's what held it. That's what kept its demand.
Huh.
The interesting part about it now is especially since COVID, you hear something, and I don't know the exact stat off the top of my head, but it's something like a third of the money or even more has been printed into existence ever since like 2020. And to me, that's a little bit of a scary thought. You hear back then, I remember the stories where people say, hey, I could have bought a cup of coffee for 10 cents, and now good luck ever doing that. Or a gallon of gas was whatever, 50 cents or whatever it was. Now you're seeing that a gallon of gas is, depending on where you are, north of $5. Coffee is going to cost you at least $5, depending on where you go. And what's happened recently is a lot of the value of the currency has gone away because there is nothing backing it. The government could just basically print as much of it as they want. And like I said, the only thing that gives us value is the current demand from people like you and I.
Huh. That was a great, I had not heard anybody ever explain that, and I've not really ever wanted to pay attention to it till right this minute. And you did that in a way that was even I could understand. So thank you for that.
Yeah, that's interesting to think about, right? Yeah. So it really is within the power of the people to change that. Should you ever manage to get enough people, on board to do something about that, right? It's interesting because there is no limit. The government just keeps printing more, and yeah.
But that demand thing, so that this leads me to another question, and we'll bring it back to, but the whole idea of cryptocurrency. So that's, is that based on your, crystal ball? Obviously, cryptocurrency is here to stay, and how it actually evolves over time, because we're at the very beginning of it. Is that something that's going to become real and also based just on demand, like you said? Or is there more to it, and what impact will that have on precious metals? I'm sure you'll probably get that conversation occurring these days.
Yeah, when I look at cryptocurrencies, first of all, I look at Bitcoin. Bitcoin's the oldest one. It's been in existence since about 2007. Right. I think the downside about something about Bitcoin is it's never seen, or actually not 2009, actually after the '08 crash is when it started, but it's never been through any recession. It's never been through interest rate hikes. It's never been through a lot of this stuff that we're seeing right now. So the question is, what's going to happen to it? It's been as high as 70,000. Now I think it's sub 20,000. It's possible that maybe it goes to 100,000. Maybe it goes to 1 million, like some people say. It's also possible that it could go to zero. Yeah. No one knows, right? It's too early for it for anyone to make any solid conclusions. The way I look at Bitcoin is, I would say, knowing that it could go to zero, or maybe it goes to 100,000. Put what you could afford to put in it. Don't put 100% of your investable assets into it. I've seen different articles of like people lost 90% of their net worth by putting it into Bitcoin. Don't be that guy. Don't put 90% of your wealth in anything. Even precious metals. I like precious metals. Don't put 90% of your wealth in it. I just look at it. You got to look at your risk and your reward. What could it do on the downside? What could it do on the upside? And make your own judgment there.
Okay.
So it's interesting you throw out the percentages, right? So what would you recommend for somebody just starting out and interested in purchasing some precious metals? What advice would you give them?
Yeah, that's a great question too. So I like looking at history. To me, it's like, first of all, like no one knows what it's going to do, but let's see what history tells. And then from there, you have to make your own judgments. Obviously, if you're 20 years old, you could probably take more risk. If you're 80 years old, you could probably take less risk. But a lot of times you go to a financial advisor and then you ask him or her like, hey, how should I invest my portfolio? The financial advisor will probably come back with you saying something like, hey, if you're okay with some risk, invest it heavier in stocks. And with stocks, you get the greater return, but more volatility. And then if you want to be more conservative, you invest it in bonds, which have a lesser return and less volatility. And the way I look at volatility, it's how well you want to sleep at night. No one wants a portfolio that's going to be up 50% today and down 50% tomorrow. You're going to lose tons of sleep over that. So you want low volatility. But so we looked, as I mentioned, we looked at history. we said, let's look at the past 50 years of history, which I think is a reasonable enough time. And then let's assume you held your portfolio for 10 years or longer. So I'm not going to penalize stocks in 2008, nor am I going to reward gold in 2011. Let's normalize this because obviously you're never going to get in at the top or bottom or something like this. But if you held a portfolio of 80% gold or 80% S&P, 20% gold, so you basically replaced part of your bonds with gold, you could actually have almost the return of a 100% stock portfolio with less volatility than the bond portfolio. And I actually have the numbers right here. So 100% stock portfolio is going to return 7% annually, and this is a real inflation adjusted return, and a 5% standard deviation. You look at the bonds, 100% bond portfolio is going to be a 5% annual return, so 2% less than the stock portfolio, and then a 3% standard deviation, also 2% less standard deviation. That gold and S&P portfolio, like I mentioned, 80% S&P, 20% gold, is going to return 6.7%, so 0.3% less than your 100% stock portfolio. Obviously not quite the returns there, but the standard deviation is now 2.7%, so lower than that 100% bond portfolio. That's what history shows, is 80% stocks, 20% gold. Obviously, I would say, depending on your situation and how comfortable you feel with a lot of these allocations, make your own judgment. No one knows what history is going to do. That's just using the past 50 years. It may repeat, it may not repeat. Time will tell.
The one guy that I read a book about, and I was completely fascinated because of his success in the financial world, Ray Dalio.
Yeah.
And was he one guy that predicted the 2008 crash, or was that was he not? I know there were a few people that said this is coming. Hold on.
I believe he did.
He was probably one of the, or maybe
Yeah,
the most
one of the few.
one of the few, one of the big guys.
I should have listened to him back then.
Well, what would Ray say about gold? What does he say? I guess not. What does he say about that?
I think there was a saying, and I could be misquoting too, but I believe it was him saying that, like, if you don't own gold, you neither know history nor something else. Like there's a saying that, and you could probably Google it. Google probably quotes it better than I do, but
Okay.
there was something where he does advocate owning it.
Okay. Very good.
I think it's you neither know history nor economics. I believe is a quote.
That would be a good.
I think I've seen that somewhere. Now that you say that, yeah. So where does one go? I know you said you can buy it online, but the idea, like you said, of having physical gold, what do you do with it, right? So, what do you do with it, and then how do you, what do you do to sell it off or trade it? I mean, once you have this in your possession, where the places, what's the market like? Because I'm like totally ignorant to that, right? So
Yeah.
I wouldn't even know what to do with it. It's a great doorstop, but I don't know what to do with it from that point.
Yeah, let me start with the physical part through AppMex, and then maybe we can get into One Gold too. So the nice part about buying physical gold, it's tangible, it's off the grid. No one knows you have it. No one could hack it away from you. You can pass it from generation to generation. It's completely private. No one needs to know that if you had a pile of gold and you want to pass it to your kid, so be it. No one needs to know. Taxes are self-reported. I do recommend that you report your taxes, but that's up to you. That they are self-reported. So when people buy gold, a lot of times they take physical delivery. They'll then decide to put it either in a home safe or a safety deposit box or hide it somewhere. Sometimes people bury it in their backyards. They hide it under baseboards, wherever they want to put it. And then most of the time people get it for a long-term hold. Like they're looking at this as a private investment off the grid, like I mentioned, long-term preservation of capital. So that's to buy it. When you do want to sell it, AppMex actually likes to provide a two-way market. So you could actually call us up and then send your gold to us, or if you're local in Oklahoma City, you could drive it over here. You could drop it off, and then we'll buy it back from you. So that's on the physical side. A lot of times people just have it and they just store it, they hide it away. One Gold is what I consider like a modern way to purchase gold, and it's currently what I'm doing too. To give you a little history about One Gold, so back in 2018, AppMex, which is our parent company, partnered with Sprott Asset Management, and Sprott Asset Management is a large alternative investment manager with about 22 billion under management, so super large, to create One Gold, basically a modern way to own precious metals. As I mentioned, One Gold's a platform that allows you to buy, sell, and trade vaulted positions of metal. So you could choose gold, silver, or platinum. Unfortunately, no palladium. Stored in the US, Canada, Switzerland, or the UK. And what we do, first of all, and how we make One Gold works, is we start by having agreements with their various vaulting companies. So these are like a Brinks or a Loomis. We then source large 400-ounce gold bars, 1,000-ounce silver bars. So you imagine these big bars that you see in movie scenes. Most of the movies aren't real gold bars, but you imagine like a big bar in a vault. We essentially buy those bars, we store it in the Brinks or Loomis vault, and then we make that available for customers to buy. And then when you buy it, you essentially have part ownership in one of these large bars. And by doing this, we're able to offer pricing that's more attractive because there's less manufacturing costs, less transportation costs with making an individual coin. You basically get basically a better price. You could fund by bank wire, check, ACH, credit card, Bitcoin, however you want to fund it. You put funds in there, you buy the metal, as I mentioned, insured and audited. When you're ready to sell it, just a couple clicks, and then you can withdraw the money right to your bank account.
It's amazing. Yeah, I like the idea of I don't own any I don't own any gold right now, but this has been good. It's been good little sort of mini class to go through and listen to you talk about it. And obviously you explain it in a way for those who are who don't live in the financial world like you do, in a way that's easy to understand. So appreciate that very much.
Yeah, anytime.
So what's the advantage of gold over silver or vice versa?
So they all have different. I'm just going to go high level over gold and silver, and then platinum and palladium are more industrial. But in terms of on APMEX, I would say about 2/3 of our sales revenue is gold. About like 30% is silver, and then the remaining couple percent are platinum and palladium. So people look at gold primarily as a store of value, something that's going to protect them against inflation. Gold is the more stable metal. So I will almost consider it like your large cap stock. It's going to be like your Boeing or your Coca-Cola. Probably, going to do something, but it's not going to change like rapidly overnight. It's not going to double. It's not going to triple. Maybe it does, but it's unlikely going to do that. But it's going to protect your assets over time. And then silver, I almost look at it as like the high volatility, higher like beta type investment. So this is like your small cap company that like if gold went up 1%, silver may go up 2%. If gold went down 1%, silver may go down 2%. So it's a lot of times people look at this and say, okay, well, I believe in gold, but I want some leverage. I want some volatility. So they invest in silver. And then platinum and palladium, just to touch on them a bit, they're largely industrial metals. So they're used in a lot of catalytic converters for automobiles, for trucks, to basically clean up the pollution. I wouldn't say you definitely don't want to get in platinum or palladium for like an investment, like a hedge against inflation. But like if you believe that the long-term prospects are favorable, then I would say get in it. But I'll say, not the best metal for asset protection.
And in very layman's terms, what makes precious metals precious? What gives them their value? Why do we? Is it a supply and demand thing? Is it we think gold is beautiful? I mean, it's just gold is it's an element you find in the dirt, but for some reason we humans decided that this has tremendous value. We could have decided that any other kind of rock is valuable, right? Am I getting that right?
Yeah, so a lot of it is rarity and demand. So like it is found in the earth. I mean, you could dig it up, but it's rare. Like I'm in Oklahoma, there's no gold over here. I don't know where you guys are, but I don't know if there is gold over there. But chances are there's a lot of gold in certain areas of the world. Obviously, California has gold because of the gold rush. South Africa has gold. There's different parts, and a lot of times it's like areas with like rocky elevations and all that. Colorado has gold too. But it's rare. And then the nice part about a lot of precious metals is they don't just like disappear. Like it's not like any other commodity. It's not like wheat. It's not like corn where eventually it just goes away. Like it deteriorates and goes away. It's a metal. You could put it in water, soak it in the ocean for hundreds of years, and it's still going to be the same.
Okay. Yeah, that's another good explanation. I'm going to take this on a completely different track for a minute and just ask about you personally.
Sure.
So you, again, I don't know anything about your background, but you decided at some point that you wanted to move into this financial arena and master that, which you clearly have. what is it about you? What is it that has caused you to go in this direction and then drives you to this day?
To be honest, precious metals has just been my investments in particular have been my passion. And I would recommend that anyone out there, if you're looking for something to do, pursue your passion. Like I have a younger brother who is still trying to figure out, I mean, he's a lot younger than I am. I think 12 years younger than I am, but still trying to pursue what he wants to do. But I would say find something that you love doing. And I've heard a thing too that basically like if you're doing what you're passionate about, and I don't know, a lot of time looking at investments. I go home, I listen to different podcasts. On the weekend, I read about financials and investments and so on like that. But the nice thing about that is, let's say there's another guy in my industry who is not passionate about investments, and he's now a peer of mine trying to compete. He's spending 40 hours a week on it just because it's his job. I'm spending 100 hours a week because I'm passionate. Over time, that my time spent over there is going to compound, and it's going to keep on growing and growing. That several years later, I'm going to look at it. I'm going to be able to compete at such a higher level than he has. But it's just basically been something I've been passionate about ever since 2008, when I saw that my 401k got chopped in half. I said, okay, let's figure this thing out, and let's try to manage it myself. So ever since that point, I've been passionate about investments, passionate about doing my own thing and managing my own assets.
You mentioned compounding, which Brian and I talk about all the time. The effects, the long-term effects of compounding. And when you just said that, it reminded me of an interview that I think I read an article where Jeff Bezos was talking to Warren Buffett about investing, and once he learned what Warren Buffett's basic approach was, he said, "Wow, this is really quite simple. Why doesn't everybody do what you suggest that they do?" And his comment was, I mean, you can, if you remember what it was, but it was because people don't want to get rich slowly. And he said, you're going to get rich if you invest, and you do it, with even just a little bit of common sense, because it's going to compound over time, and that compound is like somebody else said it was the eighth wonder of the world. Maybe it was Einstein.
Yep, that is his quote, actually.
Is it? Okay.
Yeah.
Okay.
I've heard that before.
Yeah. Yeah, the compounding effect of these kind of investments, and even when you're talking about 6%, people go, 6%, that's not that much. Why should I get excited about 6%, 7%, even 10%? That doesn't sound like that much. But compounded for a decade, you're talking very significant changes, right? Is that? I mean, yeah. It was 2008 is when you got into it. So you weren't doing investments before that at all.
I trusted someone else to do it, and unfortunately it didn't work out so well. But it's actually interesting when you mention compounding, and there's just a small little stat too about inflation too. So I think one of the hot topics right now is inflation, and the latest number is inflation is running at 8.3%. I'm sure you guys heard right. That number too. Got to live under a rock if you haven't seen inflation, right? So if I look back at history to say, like, how long are we expecting this inflation cycle to last? So if you look back in the 1960s, we had an inflationary cycle. And sorry, I'm going way back, because unfortunately you have to go 40 plus years back, because inflation's never been this high since probably the 1970s. So in the 1960s, it took the Fed 9 years to resolve that inflationary cycle. And then in the 1970s, it took the Fed 5 years to resolve the inflationary cycle. And we're right now about 2 years in. Just last year, inflation was 1.4% in January of 2021. But getting back to your point of compounding, people are like, okay, 8.3% inflation, whatever, I'll just ride it out, right? Okay, well, let's say you had a 5-year inflationary period with 8.3% inflation, and you held cash because you're just going to say, I'm just going to ride it out. That's going to erode north of 35% of your cash's purchasing power. And then let's say inflation lasts 9 years like it did in the 1960s, that's going to erode 55% of your cash's purchasing power. So, you might say 8% doesn't seem like a lot, but compounded over a couple of years, it makes a massive difference.
There you go. There you go. Yeah, that's a great way to say it. Man. All right.
Yeah, that's just downright scary when you think about it.
Yeah. Yeah, it really is. And what is your... Again, back to your crystal ball, how long is this particular inflationary period going to last? I mean, I think it was just yesterday or day before, Elon Musk, I don't know, tweeted or something. He thought it was going to last up until sometime in 2024. Does that jive with you, or do you have no idea?
Yeah, unfortunately, I wish I had a crystal ball, but as of right now, we're about 2 years in, and I don't think the Fed's anywhere near solving this inflationary problem. So I would say at a bare minimum, it's going to go at least another year. And when they do start resolving it, that probably doesn't mean that inflation goes back to 1%. You
Right.
may get, it might be sticky and it may stay, maybe it's not 8%, but it stays at 5% for a whole year. 5% inflation is still well above what we normally should have.
Right.
But I think we're in for interesting times. And one of the things I like to do, just going back to those periods too, I said, well, clearly cash is not the best solution, right? You don't want to be losing your purchasing power. So let's look at what the S&P 500 did, and let's look at what gold did if you guys are interested. But in the 1960s, the S&P actually lost over 20% in that 9-year inflationary cycle. And keep in mind that inflation hit north of 12% there. So not only did you lose nominal pricing on your S&P, you actually lost purchasing power too as well. And then you fast forward to the 1970s too. So the S&P was up this time. It was only up 4%. So people was like, oh, at least I didn't lose money. However, you look at what inflation hit, it hit almost 15% in the 1970s. So a scary thought. Hopefully we don't hit that number, but I don't know, time will tell. And then you look at gold, for example. You look at the 1960s and gold was actually pegged up until 1971. It went from 35 to 200. So it went up by a 5-fold move. And then you look at the 1970s, it went up from about 100 to 850. So if history repeats, my thought is gold's going to do extremely well. Stocks are probably going to be flat to down.
Okay. So respond to this if you would. I have many people that I know who believe that investing in the stock market it's very uncomfortable for them because it's all just this sort of smoke and mirrors paperwork drill. That
Yep.
there is real value and you can make real money doing it, but it's just there's no physical asset that you're talking about. There are people who say you got to own property. Other side of the coin, you got to own property, you got to own a
Yep.
building, you got to own a physical asset because that's the only thing in their minds that has real value. Gold falls into that category because it's there, it's real. It's not like you said, you can throw it in the bottom of the ocean, it can sit for 1,000 years and it's still gold at 1,000 years later when you dig it up, which is why when you find all these cool sunken ship treasures and they're all these stuff made out of gold, it's still good. Yeah, so for those who are kind of in that realm of only invest in the in the financial markets themselves rather than the physical attributes of gold or something like that. Any response to that?
Yeah, I would say look at all your investments and determine what you feel the most comfortable with.
Okay.
Like, I'm sure you guys remember 9/11 and, unfortunately, horrible time for our country. But I remember having a portfolio shortly after 9/11. And then a lot of times people said, okay, the stock market's going to be bearish now. So a lot of times people wanted to sell, they wanted to get out, but they actually halted trading. So that's one thing that to be aware of. Hopefully something like that never happens ever again, but it's not out of the possibility where the exchanges could halt trading. Maybe this whole Russia and Ukraine thing escalates and something happens. I mean, hopefully it doesn't, but it's just something that you need to consider. Just like what I was mentioning with Bitcoin, you weigh your odds. Obviously, probably a very slim odds of having the stock market just basically halted trading, but it's a possibility. So I would say you don't want 100% of your assets in like an S&P 500, nor do we want 100% in gold or 100% in real estate. It just really depends on what you feel the most comfortable with.
Sorry, Brian, I keep thinking more and more stuff here.
No, it's good. I'm intrigued.
Okay, so here's the next one. There's 2008. You decided to go all in, and you found out it's your passion, and now you love this stuff.
Yep.
Most of our listening audience is not like that. They're they're interested. They wanna do something that can set themselves up for the future in a way that is as reliable and stable as you could possibly make it. For those kind of people who don't have that, the kind of financial savvy that you have, what would you recommend to them? And it probably has something to do with what are you most comfortable with, because you've said that a number of times, and that's a theme, and I get it, and I believe it, honestly. But yeah, just overarching advice, financial advice for people who are out there who are, have just a mere fraction of your knowledge.
Yeah, so I think one of the things that in everyone's asset allocation is going to be different, but I would say you definitely want to consider a portion of your portfolio allocated to gold. And maybe you start with, I don't know, 1%, 2%, 5%, and you buy physical gold or you buy gold through One Gold. And then you wait a bit, wait a month, see if you're happy. If you're happy, then so be it. If you said, okay, well, I don't like the performance of my stocks, gold seems to be doing well, maybe go from 5% to 10%. And, evaluate it a month later. What do you think? And like I said, everyone's going to be different. Everyone's risk and volatility is going to be certain. Some people go way heavy in gold. I could say right now I'm heavier in gold, given the current investment climate, but it all depends. I can't just say a certain asset allocation because everyone's going to be different.
Okay. Yeah.
So I have a question about your experience in 2008, right? So prior to that, you had somebody else handling your investments and so on, trusted somebody else to do that. How much knowledge and expertise did you have in that arena at that time?
Well, I did go to USC. I studied finance, studied entrepreneurship, so I knew some. But my thought is, a lot of times when you start getting into certain funds and what they're going to do in long term, I was like, okay, well, that's why you hire a professional. Obviously, you pay the professional. I would assume that they know what they're doing, and I said, well, they made a career out of it, so I would assume that, hey, they know better than I do. But something just didn't hit me right when I said, okay, 50% of my portfolio got vaporized. It's like, surely, like any professional, and granted, it happened with most people too. Not trying to point fingers at but like they just invested it in normal stocks, mutual funds, bonds, just like everyone else. And I go, well, I could have done that with just an index fund. But
right.
So it got me looking into a lot of this stuff. Just like something was clearly off.
Yeah, I guess what I'm getting at there is, when you talk about something you're passionate about, and when you take an interest in it, and you really decide to take it on, this or whatever the subject is, you can do amazing things with it. And we've talked about that before. And clearly, you had a little bit of a head start with an educational background and so on. And at the same time, once you dove in and really committed to it, clearly it's been successful for you.
Yep.
Wow. Okay. Well, I've kind of run the course on the stuff that I'm really interested in.
I think we need to go gold shopping now.
Yeah, absolutely.
One Gold is an app, right?
It's an app or a desktop. So you could go onegold.com is the desktop app, or you could actually go to your Google Play Store or Apple App Store and download One Gold. And then you could buy it, sell it. It's basically, you could get started in minutes, which is what I like. It's what I recommend for a lot of new investors, because you go into the AppX site, and I do own physical. I like telling people to own physical too. But when you go down that path, you have 25,000 products available at AppX. And some people could say, hey, that's a little intimidating. We could go into products too if you guys care, but overall, it's not that complicated. There's a lot of variations of different products, but a lot of times people said, hey, I just want gold. Like, how do I buy just gold? I don't want to buy all this weird, complicated stuff. What's the difference between all these products and so on like that? But yeah, One Gold's a great solution for investors, or if you want the physical, that's great as well too.
I'm certainly interested to hear about some of the products. So for a beginner, right? Somebody wants to dive in and have some physical gold. What would your recommendations be there for, us with training wheels?
Yeah, so as we mentioned, there's 4 precious metals that we sell: gold, silver, platinum, and palladium. So that's the first thing. Decide what you want in terms of the metal. The next thing is there's different types of products. So there's a coin, which is minted by a government and has a face value, would say United States or says Canada or whatever on it. That's a coin. There's what is called a round. So it looks like a coin, but it's minted by a private company. So it might be like AppMex mints its own rounds. There's other mints. There's Sunshine Minting that mints their own rounds. But since AppMex or Sunshine Minting is not a government agency, we can't stamp United States on it, nor can we stamp $100 or whatever like that. So it looks like a coin, but it's in a round shape. That's called a round. And then from there, you have bars too, which bars could be as big as the things you see in the movies, these big heavy things, or they could be a small little thing that looks like a little wafer. Could be as small as 1 gram all the way up to north of 1,000 ounces. But bars are minted also by a private company or manufacturer. So that's high level coins, bars, and rounds. And then within each section of there, within coins, bars, and rounds, there's what we call bullion, which trades at close to the metal value. So like if gold is trading for $1,700 right now, your coin might be trading for 1750. So there is that, and the reason it has a small premium over the metal content is there's costs involved in refining this thing, minting it, shipping it, different miners' profits, dealers' profits, and so on like that. So there's that. So and it always trades at slightly over the metal value. So that's bullion. They have what we call semi-numismatic. So this is a numismatic is just, it's a Greek term basically meaning it's a coin industry, like basically collector coin industry. But they call semi-numismatic if it has a small premium over the metal content. So let's say gold's trading at $1,700. You find a coin, let's say it's a 1904 $20 Liberty, which is a pretty common date, but it's a coin that was minted back over 100 years ago. Obviously, it's not just gold content. It has some collector value. So it might be trading at, let's say, $2,000 an ounce. So, a little bit more of a premium. That's what we call semi-numismatic. And then the last category is what we call numismatic. So this could be, on the extreme end, you might have a 1933 St. Gaudens double eagle, which they made a few of those. Actually, they shouldn't have been made, but that was the last year they made those coins. And I believe that coin trades for millions of dollars. But whether the gold price is 1,700 or 2,000 or 5,000 or 100, it doesn't matter. That coin is almost like a rare art.
Where can we find one of those?
Yeah.
Good luck, right?
Yeah. Get a time machine and go back to 1933 and take one then.
I thought of another question. This one is just very basic. So in nature, when you find gold, I mean, I know there's an 18 karat gold and there's a 14 karat gold and there's all these different carats of gold that you can buy. And I'm assuming this boy, I'm going to really demonstrate my ignorance here, that these different carats has to do with, is there filler in them that causes it? What causes it? What is gold in nature? Are there different densities of it, and that they're more dense it is, the higher value it is? How does that work?
Yeah, so gold in nature could depend basically on where you're finding it, the type of ore, and so on like that. But to get into the carat, so like 24 karat is what we call pure gold, and everything is out of 24 parts. So 18 karat is 75% pure gold. So like if you took 18 divided by 24, it's going to be 0.75.
Okay.
14 karat is like 58%, I believe. So it's a little over 50% gold. So
okay.
14 divided by 24. So that's what 14 karat gold is. A little less than or a little more than half gold. And obviously 9 karat or 12 karat would be 50% gold. But in nature, it depends on where you find it. There certainly are 24 karat gold deposits. They're rare. And then a lot of times they're less than that too. So like what happens is like a mining company might pull gold out of the ground and then they kind of refine it. They don't have all like the refining processes right there on the mine site. So they might get a lot of the base metals out and they make it into a bar that's about 80% pure gold. And then they call it like a doré bar. Then from there it goes to a refinery, and then the refinery mints it to like basically 24 karat, or what they call like 3 nines or 4 nines, or what 3 nines is 99.9% pure gold, and then 4 nines is 99.99% pure gold.
Dang.
I'm glad you asked that question, because I had no idea what the percentages were with the carats, and so that's pretty cool.
Yeah, it is pretty cool. All right, this has been educational for sure.
Okay, good to hear.
Yeah, that's what we set out to do, right?
That's it.
Passing on the wisdom of the ages.
That's right.
This was just wisdom we didn't have.
That's right.
That's why we brought you in.
That's right.
So what else? What have we not asked you that you, just based on the conversation tonight, that you think would be beneficial for us and our listeners to know?
I do have something I'd like to talk about. It's actually something that I was proud to launch too. So I'm actually, obviously you mentioned, Director of Business Development here at APMEX and One Gold, but what we launched it's actually this thing. It's called the Bullion Credit Card. But it's a new credit card. It's actually a first in the credit card industry. It allows you to earn precious metals as you spend. So if you go to Costco, you go to Target, you go to your favorite restaurant, essentially you're earning precious metals in reward. So instead of like cash back or airline miles, this allows you to earn gold and silver. But it's a brand new card. I haven't got a credit card in probably over 15 years, but I was excited about this. I got it. You can check it out at thebullion.card.appmex.com or thebullion.card.onegold.com.
Dang, that's pretty cool.
That is very cool.
That sounds amazing. Okay.
Yeah, it's neat for the people who want to get into gold, but like they don't want to have to worry about buying it all the time. They said, hey, just put whatever. And like, I'm sure you guys probably have rewards credit cards too. I have airline cards. I'm like racking up the miles like crazy, especially with COVID in the last couple of years. It's like I couldn't go anywhere. So it's just like all my miles are piling up. And sometimes it's nice to have something that you could actually use and would appreciate in value.
Yeah, it's not going anywhere.
It's good way to dip your toe into it.
They're not going to take it away. They don't expire. Yeah.
Yep.
Yeah, that is fascinating. I bet it's doing pretty well. Huh? How long has it been out? The card?
It launched in late August of this year.
Okay.
So we got a ton of people interested. Actually, it was funny when we first launched it. Our partner bank actually had a backlog of applicants too, because there was a lot more people than they initially anticipated applying for the card. So now we're getting through the backlog and we're ramping up our marketing for it.
That's a good problem to have, for sure. Yeah. Wow, glad you said that.
Yeah, definitely have to check that out as well.
Bullion card.
Yeah.
AppMex, right? I've got to say that. AppMex, is that how you say your company?
Yeah, it actually stands for the American Precious Metals Exchange. Okay. So it's AppMex. I'd say it's like a mobile app in like Mexico, so it's AppMex.
Okay, there you go. There you go. It's a good way to remember it.
Yep.
All right.
I'm good, Bryant.
I am good. I certainly appreciate the time and the information that you've shared with us. Learned several things. So you've definitely piqued my interest.
Sure. And just as a concluding thought, like I said, I would definitely recommend everyone check out precious metals. If you want physical precious metals, check out appmex.com. That's APMEX.com. If you want to try that vaulted solution, check out onegold.com. That's ONEGOLD.com. And for listeners too, we do have a special coupon code on OneGold too. So it's 50% off the premiums of US gold and US silver. So if you want to get started and you want a little discount, that coupon on gold is gold 50 off. So GOLD 50 OFF, and then the silver coupon is silver 50 off.
Wow. Had to wait till the end to get that one. End of this podcast.
That's right. Yep. You didn't stick it out till the end. Right. You didn't get the benefit of that, right? That's cool.
And when you say 50% off, is that 50% off any amount that you want to buy, or is there some limit to it?
So it's 50% off the premium. So this is the markup over spot. Just like I said, that's the manufacturing cost. And there is a cap of a $500 discount on the coupon. So if you do happen to place a larger order, 50,000 plus or something like that, it caps at $500.
Okay. There we go. All right. Well, thank you, Patrick. This has been wonderful. We appreciate it very much. I've learned a lot, way more than, well, I mean, I knew I was going to learn a lot, but I learned more than that. I had high expectations, and you exceeded them. So Thank you.
Great. Well, thanks for having me on.
All right.
You ready to do it?
Is it that time?
It's that time. You almost.
I hit the wrong button there for a second.
That's a first.
But I'm going to say something like this. No matter who you are, where you are, what you're doing, make sure between this podcast and the next, you take time to enjoy the ride.
Thank you for listening to this episode of the Graybeard Chronicles. Please subscribe so you'll receive notification when new episodes are available. To learn more about the Graybeards, visit their website, graybeardchronicles.com.
I think I almost have to screw this button up every now and then. It's like a thing.
Yeah, absolutely.